We continue our conversation. Senior markets correspondent Kevin Green is here, and we are watching some of these key levels. Nice to see 5,400 rather than last Monday's lows. I think some people would appreciate that, not all, but some. Some of your thoughts on the levels you are watching, Kevin. Good morning.
Yeah, how you doing, Nicole? Yeah, if you're looking at the longer time frame, we're still kind of hitting the upper end of this resistance zone here. That's exactly where we rejected at yesterday and kind of closed a little bit lower. And this is where we're pretty much having a little bit of a battle here today. If you're kind of looking at the longer term time frame, we've had three, bear flags kind of showing up, meaning that we had counter trend rallies to the upside before we actually started to fade. And I know that we have a lot of enthusiasm. The sentiment has kind of shifted here, but from a technical standpoint, we're still a little bit cautious here, trying to reclaim that 20-period moving average, sitting at around 54.94, and then also trying to get above and try to at least touch that 200-day moving average, which is sitting at around 57.30-ish or so here. We still have a gap to the upside that we want to be able to fill. We did see that death cross, that 50-day moving average closing below the 200-day moving average. It's something that you're going to have to see develop. It's not always a signal that the market is going to correct even further, but it is something that if you are in a bear market could signify the beginning of the potential downtrend or the last downtrend or wave within a particular cycle. Now this morning, what is actually very bullish here is the MACD is crossing that 12 EMA is above the 26 EMA. You're seeing market breadth expand. You talked about the sectors that are performing. It's pretty much across the board, whether it's defensive, if you're looking at utilities, or if you're looking at financials on the rate front, or if you're getting a little bit more speculative and you're looking at information technology. One thing I do want to kind of note that a lot of this outperformance this morning, Nicole, is actually coming from the semiconductors. The SOX index right now is up about 1.2%, and NVIDIA is skyrocketing higher right now, up about 1.72% so far. So that's going to be a key driver if that trend is going to hold. On an intraday basis, what I'm looking for to the upside, your first area of resistance, 54.50. Next one is going to be 55.15. Let's say 5,500, 55.15 to the upside here. We have any type of further breakdown, you want to be able to hold 53.65. If not, you're looking at 52.60. The range is still wide, but it is coming in. As you talked about, the volatility index, or the VIX, or implied move of the S&P 500 is crushing here a little bit, getting below that 30 level so far. And that's the direction you really want to see over the next couple of trading sessions to give maybe bulls a little bit more confidence that they can try to break up above that resistance level that we kind of talked about earlier.
I almost had to rub my eyes when I saw the two handle on the VIX, by the way. Because I feel like we went up to 60 and we've had just such a wild ride. We haven't really seen the 20s too much. Talk about the treasury spreads, the long end always in focus. What is it that you're watching for today?
Yeah, still keeping an eye on that this treasury spread, the 10-year minus 3-month spread, and really trying to give us a little bit of a direction. It has been a leading indicator for the S&P 500, and I would think that it's going to continue to do so. We did see a nice little pop to the upside. It kind of broke this triangle formation, if you will. And if you continue to stay positive, I think that's going to be good for equities. If you start seeing that move back to the downside or close to an inversion where that 3-month is at a higher yield than the 10-year, then I think that's also going to put some pressure on equities. If you kind of just take a snapshot from yesterday's close to this morning, you would say, okay, the 10-year is still not doing much, but overnight we are still seeing a lot of volatility within the 10-year rate structure. Not only if you're looking at the 10-year futures, the bonds, or if you're looking at the rate futures, which is obviously showing you the rates here. So still a little bit of volatility there, but it seems like it's come in a little bit, and we still want that direction to move up. You want that normalization. You want the 10-year to be higher than that 3-month treasury for now. That's something to kind of keep on the radar here, because the technical structure, if you're looking at the weekly chart for treasuries, does kind of signify that prices are still potentially going to be in a correction mode to the downside, meaning yields move a little bit higher, which is fine, Nicole, if the 3-month or the 2-year is also doing the same in the same type of fashion, keeping that spread intact. If you don't, that's where you get this kind of disconnect or this disjointed market in treasuries that makes it a little bit more concerning when it comes to equities for right now. But once again, the equity's looking like they're trying to recover here. I wouldn't give an all clear signal yet until we really break some of these key levels to the upside, but we're going towards the right direction, at least for now, until we get up to the mega cap names when it comes to earnings. And we'll see those over the next couple of weeks.
All right, so we'll make sure it doesn't change direction on us. And then the VIX, you're watching that. Anything that stands out to you today?
Yeah, I mean, if you're kind of looking at it, that move that you talked about, a VIX at around 50 to 60 was a 7 standard deviation move, meaning that it rarely ever happens. We had the fourth highest elevated VIX that we've had since the index has been published here, and rightfully so. It is a mean reversion, mean reverting type of indicator, so we should see it crush here a little bit. Now, technicals are not the greatest when you're looking at the VIX. I'm not really a fan of it, but if you kind of look at the RSI, it's actually a pretty decent indicator, and that means that we might have a little bit more to the downside to go when it comes to the VIX, which should be conducive for equities kind of moving higher here. But once we kind of get back to around that 21-ish area, that's where you get a little bit concerned that maybe we do see a little bit more of a re-rating. Once again, direction right now is to the downside, equities to the upside. That's a good correlation here. But I don't think we're fully out of the woods yet for the VIX. Doesn't mean that we have to get back to 60, but we could have an elevated VIX where premiums are still fairly expensive, especially when you're looking at downside skew or put skew. So once again, be on the radar for that. Still be a little bit tactical here. I don't want to think that we're in the all clear here. Technically, it seems like the S&P 500 might have some more room to go to the downside here, but not until we potentially probably hit that 5,700 level. That's where I would think shorts might step into this market and try to knock it down once again.
Yeah, and we'll continue to watch gold, which is, always a safe haven during the most volatile times, and not too far off from the 32.63 high we've hit over the last few days as well. Kevin Green, great to see you. Thank you for all of that. Appreciate it.